Hello guys and welcome to Hackman Traders. Today in this video I'll be showing to you guys diversifying your portfolio is a good idea or a bad idea. Like what are the pros and cons to it when you are diversifying your portfolio. Like there are some of the points for in the stock market when you are applying a certain when you're applying a strategy, there are some pros and cons to it, so you should be aware of those pros and cons before you apply a certain strategy or before you implement a strategy into that stock. So the same is the case with diversifying your portfolio. So whenever you're diversifying your portfolio, you should must keep like come up with the points that what will happen if you diversify your portfolio in these stocks. Like what are the possibilities that that will happen when diversifying your portfolio. So today in this video I'm going to be showing to you guys exactly that. So let's get started. Now I've just come up with 3 points in the pros and 3 points in the cons. So I'm going to explain each not in detail but briefly so that you guys have a clear idea of what this video is all about. So in the pros, like when you're diversifying your portfolio, it gives you an option to think about a certain stock. Like when you're diversifying your portfolio, diversification means that you are diversifying your portfolio, like you are splitting your money into different stocks. That might be two or three stocks or maybe more than that, depending upon your situation or your current balance, the money you have in your hand. So it all depends upon that. So it gives you an option to think about different stocks. Like if one stock you are sure about that this will increase in value, then fine, you can invest in it, but that may take a while. And there's also another stock that will increase in value in 2 to 3 days, so that's also an option for you to invest. So you can diversify your portfolio like 50-50 in these stocks, or maybe save some of it and make it 30-30, something like that. So split it, like two, invest two in stocks, 2 portion stock, and save the third portion for later investment. So you can also do apply that strategy as well. That is also a great idea. Now the con to this strategy, like the con to this method, is that managing different stocks at one time can sometimes be difficult. Like you will have your focus on one stock, and the other stock would you lose focus for the other stock. So this is the con to it. Like when you have invested into too much stocks, just make it simple. Like invest into 3 4 or maybe 2 3 4 in this manner. So try to, like, the less diversification you do, the more comfortable you will be. But success doesn't come from by staying in your comfort zone, so you'll have to go out of your comfort zone if you want great success. So that is also a point. But try to keep it simple, keep trading simple. Save the charts, the layout of the charts of how you have pulled out all of the indicators in place. So do that. Like what I mean here is that managing stocks at too many stocks at one time is more than difficult. So try to make it as simple as possible. So the other point is that if one loses money, the other gains money. Like what I mean right here at this point is that, if let's say if you have diversified your portfolio into three different stocks, so if two stocks loses money, like goes down in decreases in value, the other two stocks would increase, the other one stock would increase in value. So this is the power of diversification. And you will not lose your money in this case, as you have diversified your portfolio. So you'd gain money, like you have the chance to gain money. You are not like in some case you will lose money, but in the other one you will gain money. So this is the power of diversification. And maybe this can also happen that if both of the stock loses too much money and the other would gain double of the money that you have lost. So this can also happen. The con to this point is that, what if all the stocks decreases in value? So what would you do in that situation? So like all of the stocks decreases in value, so now what will you do now? So there is one strategy that you can apply here again. That is the strategy of risk to reward ratio, risk management, stop loss. You can apply that strategy at this point, so you do not lose much of your money. So the con the con to this, like this can be overcome by using stop loss and risk management and all of that stuff, so you do not lose your money. Now the third thing is like the diversification gives you a chance, like you do not put all of your eggs in one basket, all eggs not laid in one basket. So you do not put all of your eggs in one basket, you diversify your portfolio. You have like put all of the eggs into different baskets, like you have invested your stock, like you have split your portfolio into 3 or 4 different stocks. If one loses money, the other would gain money. It is this point, sorry about this, it is this point, this one, it is this point. If one loses money, the other gains money. Now there is also a disadvantages to putting all of your eggs in one basket. Let's say if let's say let's suppose like this one point, let's suppose in this point sometimes not diversifying is better. Now let's say you have diversified your portfolio, you have bought 3 different stocks, again the second point, and all of the stocks decreases in value. So you definitely your share price decreases in value, so you're going to lose money if you sell out your stocks. Now what will happen if you have put all of your eggs into one basket and take the risk, like put bought bought shares in a single company, in a single stocks, and that stock increases in value, like increases far more increases than value. So when you have so you would have lost that money as well. Now if you have put all of your eggs in one basket, your risk margin should also be like not high, but you should have a high risk tolerance. You should bear that risk if you loses money. So the benefit to there are also benefit to these and disadvantages to these, like these can be overcome by risk management, by the method of risk management. All of these points mentioned here in the cons section can be overcome by using the risk management ratio, risk management or risk to reward ratio. Using the stop loss, these can be overcome. These are not a big problem, but having a diversified portfolio, a well diversified portfolio that you understand and that you understand well, and it's simple and easy to understand, that is far greater than anything else. So those were the so diversifying, in my opinion, by far that we have discussed, like showed to you guys. So it means that diversifying is not a bad idea, it is a good idea and can be used to your advantage. Only if you can, only if you knows the only if you know how to use it properly and have the well and you have the well versed in this case. So you should be successful in diversifying your portfolio, and it won't be difficult for you to lose your money. Like it's not a big problem, it would not be a big problem for you. You will not lose any money, any of your balance in the stock market, if you apply if your strategies are strong and you and your risk if you have a high risk tolerance, so you would not lose money. Either you diversify your portfolio or you do not diversify your portfolio. In both the cases, diversification is a good idea, it's not a bad idea. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market or the forex market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.